A muted market debut for shares of airport, restaurant and lounge operator Travel Food Services. The stock opened at a 2% premium to its offer price, but reversed those gains to close lower. The company is valued at $1.67 billion after the listing. It runs big names like Jamie Oliver's Pizzeria, Krispy Kreme and KFC at airports in India and abroad. Analysts say uncertainty over India-US trade talks did weigh on sentiment. The IPO was an offer for sale, with the Kapur family trust selling nearly 14% stake. I'm delighted to say Varun Kapur is joining us now, Managing Director and CEO of Travel Food Services. Varun, great to have you on Inside India. Just help us understand how TFS is positioning itself for growth in the long term, despite the short-term volatility that we saw yesterday during your debut.
No, hi, Shri. Thank you for having me part of your show. So no doubt, I mean, we very simply, like we explained, we operate in two segments in aviation: travel, QSR, and lounges. We run these across airports in India. 14 airports in India currently, 3 airports actually in Malaysia as well, and 1 in Hong Kong. And if you see the Indian market particularly, it's been a fantastic growth story, I think, across the Indian market, but I think more so even in aviation. You know, some of the investments the government has been doing, private airport operators. We've truly seen the last few years, new airports coming in, the way the whole development, the aircrafts, significantly increasing in the market. So, all of that coupled together, the tailwinds have been extremely strong. Expect that to continue to be for the years ahead. We've been the third largest aviation market currently and expected to grow 9 to 10% growth rates over the period. Now, in terms of any market, whether seasonal or short term, you always see a month or two maybe in terms of growth, but it's always been growth, just the level of growth there. But I think long term, those structural trends, which is the way we look at our business, right? We have long-term contracts, 8 to 9 years with most airport operators, and things look as robust, if not more robust than ever, in terms of the Indian aviation story and if the Indian consumers, experiencing concepts and brands at airports.
Varun, let's talk about what's over the horizon in India. You operate in 14 airports, I believe, within India. Given the fact that the government seems to be very focused on building and developing aviation infrastructure, commercial aviation infrastructure and the airports in Tier 3 cities and above, is that an opportunity for TFS?
No, undoubtedly, Shri. So I think the opportunity tremendously, while we've been largely at Tier 1 and Tier 2, I think the development, the immense investments the government is doing around new airports, developing existing airports. I mean, you fly through India anywhere, whether it's Tier 1, Tier 2, Tier 3. You see the way terminals are being upgraded. You see the way runways, infrastructure across the board. It's tremendous. You see the UDAN scheme, for your viewers who are not aware, the government actually in encouraging travel on a much wider spectrum of the Indian population. The reason why you're seeing the growth rates in India on traffic. I think no doubt we go wider as these airports become larger. They become truly an opportunity for us. And yes, the brands we get, it makes sense as airports get a bit more passengers, but that's happening across the spectrum in India. You see the way growth has been last few years is just accelerating, which is, I think, a great opportunity for our business, for aviation, and ultimately connecting the country for consumers in India to move around, whether leisure or for business.
Can you talk more, Varun, about the fundamental picture, including the debt-free status and the positive cash flow? And at what point do you think that's really going to start resonating among investors?
Sure, Shri. So I think we've been, as a business, we're lucky to be, yes, the country, at the right country, we say the right time in the right industry, right? It's worked out quite well in a sense of the business opportunity. And I think we've partnered quite closely with airport operators who do a great job in India. I think run some of the best airports globally, if you see the way it is. So we as a company have been the last few years, to give you a perspective, we've grown quite consistently over the last many years. We're today a company that has a PAT of about 3.8 billion INR. We grew from about 3 billion last year. So 20% growth, a bit more than, or 27% growth, 20% the previous year as well to reach 3 billion. So it's been consistent growth on our side. These are PAT numbers after tax. In terms of our position, we have no debt on the business. We've grown the business consistently and quite disciplined, and in a sense, conservatively, we have more than about 6 billion on our rolls in terms of cash available for development capital, because the market itself, the opportunity of growth, both for us in India, but even internationally. We went to Malaysia recently, Hong Kong, as well through a joint venture there. And the opportunities of growth for us, both in our home markets, but internationally as well, with lounges particularly, is something we really look at. So that's, I think, an interesting opportunity available for us.
Absolutely it is, Varun, and you preempted my next question. What's next then, globally, for TFS? If you're in Malaysia and Hong Kong, and to what degree does it help, and can you leverage off your joint venture partner, UK-based SSP?
So no doubt, we've got, I think the business is built on the strength of a great partnership among two promoters. We have two shareholders in the business, SSP, based in the UK, and K Hospitality, a strong Indian promoter with 50 years of experience in the Indian market. So I think that coming together, it's been a 16-year journey for the business, reaching where we are today. And yes, no doubt in India, we're a market leader by a significant margin. But internationally as well, I think some of those practices, the lounges that we've developed in India, I think stand out globally. We've got a lot of recognition for them. So we've taken that product to other markets as well, leveraging that relationship with SSP, who's actually present in many of these markets on the travel QSR side. They have client relationships, well respected. Leveraging that relationship with our lounge expertise, where we stand out, is something. So hopefully, should we come in the market near you, and maybe when you're traveling next, or what your viewers are, they would see a TFS lounge at airports, not only in India, but internationally as well.
Absolutely, Varun. I might take you up on that offer, but are there? The runway. It's very clear that the runway in India is very long and very exciting. But in terms of a diversification strategy, do you plan to shift the business out of the core F&B and lounges into perhaps areas like duty-free, perhaps areas like in-flight catering, which look as though they are natural next steps and natural fits for the future in terms of diversification? Is that a plan?
For us, I think the path is quite clear. So starting off, I think India is going to be the core of our focus. That's continued to be. I think that's while, yes, we're going internationally, we see ancillary opportunities to leverage our expertise in lounges. But India very clearly is where the runway for us, if I can use an analogy from aviation. And you see the way it's played out in India, growth has been tremendous. But the next 10 years, it's expected, just our industry of airport travel, QSR and lounges, expected to grow more than 20%. That's a CAGR of 20% over the next 10 years. So there's ample opportunity in India. That's just if you maintain market share. We're going to grow market share. That's our aspiration. We're going to create value for all stakeholders, all shareholders, and continue to grow the business. So the industry itself in India is expected to grow about 20%. So in a scenario like that, we don't see a need to look beyond travel, QSR, and lounges. We know that well. We have expertise there. We had market leadership, and we perform financially well. It's because of our clear focus. I think that won't change. That's a clear strategy on our side. Because of the runway, right? Why would you look elsewhere when the growth opportunity is tremendous in the area where it's self-operating? So I think that's the strategy that we have at TFS.